dear students. I am Dr. Pallavi would like to introduce a subject that is Basics of Cost Accounting. This subject we are going to study in the first year of second semester. Now, if we talk about the cost accounting, what it means by cost accounting. See, the very first thing in a first semester, we have already studied about the accounting. Accounting means what? It is a recording of transaction or recording of financial transactions which is having a monetary value, that books of accounts we are maintaining and we are preparing a final accounts. That all about we are talking about accounting. But when we are taking into consideration a cost accounting means what? Let us take an example. In our day-to-day life, everywhere we require a cost. Means for every activity or for every operation, we will require a certain amount of cost. Cost which is going to be measured in terms of money. Because if you are carrying any activity, that time you have to pay a amount of cost. Take an example. If you are coming to a college, so coming to a college will cost you in terms of transportation, in terms of any fare. If you are coming with a bus or if you are coming with a rickshaw, so that fare you are paying to that person. So for doing that activity, a certain amount of cost you are paying to another person. So now we will going to take into consideration what do you mean by cost accounting. When we talk about a cost accounting, it is a accounting of a cost, because in every organization they are dealing with a different kind of products and services. So whenever they are dealing with a different kind of product and services, that time every activity or the every operation include a certain amount of cost into it, and that is the reason it is much more necessary to have the cost accounting in an organization. Now, if we will see that which are the different books available for the study. These are the certain reference books which are available for your study, because when you will go through the reference book, you will have a proper knowledge and you will have a more appropriate data through the reference book. After that, now we will see the introduction to cost accounting. Introduction to cost accounting means what? Now we have to understand what exactly the cost accounting is. Now see, in our day-to-day life, we can say certain variables are there, certain imbalances are there. Whatever the activity we are carrying out, that will have the cost. But every time we cannot say that the cost will be fixed in every stage or the cost will be fixed in every manner. No, because it is going to be changed. It is going to be fluctuate. And why it is going to be fluctuate? Because there are certain reasons which are included in it, and that is the reason it is going to be fluctuate. Sometimes you will require a less amount of cost, or sometimes you will require a maximum amount of cost, because the operations will be different, the environment will be different, and the activities will be different. Okay, got my point? Now today we are going to see the different things. The very first is we are going to study about the concept of cost. Secondly, we will going to study about the different definitions of a cost. And the third one that we are going to study about the components of cost concept. So let us start. What is the concept of cost? Now here in this picture you can see the amount or the note of a rupee or a note of a dollar or a dollar which is cut by a scissor. Okay. Now why the picture is given? Because see, when you will have a cost cutting, then only you can have the maximization of profit, because every single thing which require a cost, and whenever you will save the cost in your organization, obviously your profit level which is going to be increase. So the concept of cost is what? Any expenses which is incurring during any level or incurring during any operation of the business. So always remember that whenever we are doing any expense or whenever we are carrying any activity, that time always take into consideration that our cost should be minimized while taking the operation and our profit should be maximized. So this is the basic thing about the cost. Now, what is the objectives behind this? Why we are learning this? The very first is to know the concept of cost. We have to know what do you mean by the cost? Why we are studying this? Now, the second one is to understand the definition of cost, because see, the different author has given their different definition, and the same thing is that the every author wants to say something out of their definitions, and they want us to make understand that what exactly the cost is. Now, to know the components of cost, what are the different components which are included while we are studying the cost? Next is what is cost. Now, if we talk about a cost, already I have said you that cost which is known as a generally which is known as an expenses, okay, or the any activity which is having certain monetary terms, that is known as a cost. Now, here in this picture you can see that the first is material cost. Material cost means what? When any company try to make any kind of production, that time certain activities are involved, like the company has to call for the raw material, company has to pay the processing charges, company has to pay the transportation charges, again company has to pay the labor charges, and n number of things which are included when they are calculating a material cost, because the material, it is the basic thing to have the production into the company. Okay, now the next is labor cost. Labor cost nowadays we can say that, or we can see that in everywhere, labor is the most expensive thing nowadays, because you have to pay at least 300 per day, or the if a labor is more skillful, or the labor is more having a capacity to the work, so that up to the 1,000 rupees also you are going to pay to that particular one labor. So what is that? The cost which is going to be high, because the capability and the skill of a labor which is there. Now, this is about the material cost and labor cost. If we talk about the third thing, that is the overheads. Overheads means what? Take an example. Overheads means these are the charges which is going to be fluctuate, or these are the expenses which is going to be fluctuate. Sometimes you can see the cost which is less, or sometimes you can see the cost which is high. Why you are saying this? Because you are not certain about a certain uncertainties. Certain uncertainties means what? Any situation can come, and in any situation you have to pay the amount of money, but you are not knowing that whether you are going to pay a certain amount of money or not. These are your overheads which can be related with your electricity charges, stationery charges, administrative expenses, all these things. And that is going to be vary, that is going to be fluctuate, because it is known as a variable cost, because it is not a fix. It is going to be vary. And that is the reason these are the overheads which are related with the cost. Now, if we talk about the definition of a cost. Now, what is the definition of a cost? If we think about the definition of the cost, that time the first definition given by the CIMA. CIMA stands for the Chartered Institute of Management Accountants. Now, this organization or this institute has given a definition, because the terminology which the terminology which they have explained, that is in a more specific manner. What they have explained? They have explained that the amount of expenditure incurred or attributed on a given thing. Amount expenditure means what? Let us take a simple example. If a child want to buy a chocolate, so for buying that chocolate, the child has to pay a certain amount of cost, right? So what is this? Doing any expenditure or incurring any expenditure, you are giving something, right? So that is what incur or attributed on a given thing. And more simply, if we want to say, it can be defined as that which is given or sacrificed to obtain something. Means what? Ki nothing is going to get a free, right? Whenever you are getting something, out of that you have to pay a certain amount of money. Simple example, if you want to buy a particular bag, so for buying that particular bag you have to pay the amount of money, right? So the amount of money will be variable, because as per the quality, as per the product, as per the service, as per the requirement, as per the level of that product, your variable cost which is going to be change. And that is the reason whenever we are obtaining something, we are paying amount of money to the third party. That is the definition given by the Chartered Institute of Management Accountant. If we talk about the next definition tell us about, it is like, it is an expenditure which is required to produce or sell a product to get an asset ready for a normal use. Now, produce or a sell or a product. Produce sell means what? Take an example, if an organization want to sell their product into the market. So when that organization want to sell their product into the market, they have to carry certain specific cost, right? They have to do the distribution of that product, they have to do the advertisement of that product, they have to do the positioning of that product, again the promotion, again the all n number of things that are included when they are going to sell a product into the market. So whenever they are getting sell of that product, it means what? They are getting a asset ready with them. Asset means what? Asset include your stock, asset include your cash, bank balance, so all these things. So assets should be ready so that you can sell your product into the market for the normal use, for the customer use, or for the end users. Okay. Now, if we talk about in other words, now it is the amount which is paid to manufacturer a product, purchase inventory, sell merchandise to get equipment ready to use in a business process. Means what? Key organization, if they want to sell a product into the market, the very first thing is that they have to take a quotation from the different suppliers. Then after getting a quotation, they will analyze that which quotation is better, which is fetching a less cost for our production. So after deciding that, the management will decide which should be the final one, and then after finalizing, they will carry the operations of that raw material. After doing the operations, then they will have the final product into the market and the final equipment ready to use in the business purpose. Understood now? What are the different definitions of a cost? Okay. Now, if we talk about the components of a cost concept, what could be the components of a cost concept? Because components, see, there are different kind of components which is having a different meaning, which is having a certain cost related to it, and that is the reason we are studying why these components are there, how it is going to relate to the business, how this cost is related to the different components. Okay. Now, the very first is concept of objectivity. Concept of objectivity means what? See, organization will have a different objectives. Okay. Now the size of the organization will be different, the nature of the organization will be different, again the business of the organization will be different, and the operations of the organization will be different. Because you cannot say that the every manufacturing industry or the every service industry or the every retail industry will require the same cost. No, because the every service industry or the every manufacturing industry will have the sub industries under them, and due to that sub industries, they will have a different cost, they will have a different objectivity. Might be I will have my object for my company will be different, and the another company will have their object in their company will be different, right? Because what? Because the size of the business will be different, the nature of the business will be different, the product of the business will be different, whatever the service I am going to give to the customer, that will be a different. So these are the objectivity. So if the objectivity is clear to me, so I am very much clear to my cost, what should be the cost that will be required for my particular product or a service, because I know my objective is what? My objective is to sell that product into the market, and for doing that, whatever the cost I will require, that is going to be paid by my organization, or that much amount of money that has to be paid by my organization. So this is the concept of objectivity. So the objective will be different, obviously the cost will be different. If suppose objectives are different and the requirement of cost to achieve that objectives is less, so obviously your profit maximization will be more. And if objective is one, but the amount of cost which is required to achieve that objective, if it is high, obviously your profit level which is going to be a decrease. But in every sense, you cannot say that every time you have to cut the cost. No. In some operations, it is very much required that you have to put the cost, you have to pay the amount of money to get a future benefits out of it. And that is the reason the concept of objectivity is given. Now, if we talk about the next one, the concept of materiality. Materiality means what? See, the materiality is a concept that defines why and how certain issues are important for a company or a business sector. Means, I can say that if I am carrying a particular business, some things which are more material to me, that is immaterial to the another company. Like take an example, if I am carrying a cotton operations or if I have a cotton industry, so the raw material which I required for my industry, that will be different and that is material to me. But if we take an example of another industry like any beverages industry, so that material will not be that much material to them or that will be immaterial to them, because I know this materiality which is having a certain issues and they are important for my company, they are important for my business. Now here the material issue can have the major impact on a financial status, because something which is more material, for that I will pay a more cost. Getting my point? Then the next, economic, because if the economic conditions which is going to be changed, that will impact my business, that will hamper my business, that will have a certain advantages as well as limitations for my business. So what is that? When I'm talking about economic issues related with the materiality, so I am very much keen to know that what could be the economic situations. Okay. And the next is reputational. Yes, obviously, if I have a business or if I have a reputation, if I have a brand in the market, so obviously I'll pay the more cost for my product, or I'll have the more efficiency and effectiveness in my product. And the legal aspect of the company, when the company is there, company is registered under the Companies Act 2013. So every time the company has to follow whatever the legal aspect related with the Companies Act 2013. As well as if we talk about the system of internal and external stakeholders of that company. Now, the very first question is, who are these stakeholders? Who are these stakeholders? Stakeholders, are they shareholders? No, shareholders and stakeholders are not the same. If we talk about the stakeholders, stakeholders is a holistic concept. And stakeholders means what? Stakeholders include your shareholders, debenture holders, investors, distributors, customers, everyone. So these everyone is known as your stakeholders. Okay. So when I'm talking about my internal and external stakeholders of the company, it means what? I'm very much taking care of my internal operations that are regarded with the cost. And I'm very much keen about to know the information about my stakeholders, because my stakeholders are going to give me a profit in a future period of time if I'm going to satisfy my stakeholders. Obviously, if I'm giving a more profit, my investment will be more. I will have the more investors. If I'm giving a more percentage of profit to the distributor, supplier, obviously they will collect a material from me. Yes. Again, if I'm giving a satisfied features in my product to the end user, obviously my faith of customer will increase and my customer ratio will increase. So what is that? This is all material to me, because I am doing a business, I am paying a cost for this business, and that cost I have to recover from the market. So this is known as a concept of materiality. Now, if we talk about the concept of time span, it is very much clear to all of you. Okay. Time means what? It is a particular time which is required for to carry an any activity, or which is required to carry an any operation. Okay. If we talk about the time principle means what? It is the concept that a business should report the financial results of this activity over a standard period. Over a standard period means what? Ki if a company has decided that in a particular month or in a quarter or in a year, if we are going to increase the sell from 5 lakhs to 10 lakhs. So means almost what? Almost double the sale the company wants to increase. Now what is the time span they have given? Time span they have given that can be monthly basis, that can be quarterly, that can be annually. Are you getting my point? It means what? For a period of time, if you are putting a cost, it means what? You should report the financial results that are needed for that particular operation. And for that time period, you are just strucking your cost into that particular time. Let us take a simple example. Like you are doing a fixed deposit with a bank. Yes. So whenever you are doing a fixed deposit with a bank for a particular period of time, you are getting stuck with that particular amount, because that 10 lakhs rupees or that 5 lakhs rupees you are putting with the bank for a number of years, and for that number of years you are not getting something out of it. Yes, in a future period of time you will get something out of it, because you know, for a time span I have given my amount of money to the bank, and after a period of time I'll get a amount of money with the interest. So what is that? It is a concept of a time span. Now if we talk about the next, that is the concept of relevant range of activity. Why the relevant range of activity? Because relevant range means what? It is a specific activity level that is bounded by maximum and minimum amount. Let us take an example. Company has decided to do the activity. For example, recruitment of a people or the recruitment of a human resources. Okay. Now, while doing that activity, the company has set a budget that minimum amount of money that I will require or the company will require this X amount of money, and the maximum amount of money, that is the Y amount of money. So between X and Y, the amount range which is the minimum and maximum. So that is the relevant range of activity. For doing that activity, you are deciding a range that should be minimum, that should be maximum. So within a designated boundaries or a certain revenue or a expenses level that can be expected to occur. Means what? Ki that activity is expected to have that much of cost only. कि हमने डिसाइड किया है that 10 rupees will be the minimum cost and 20 rupee will be the maximum cost. So whatever cost I am requiring to do that activity, that should be in a between that range 10 to 20. That can be 11, that can be 15, that can be 16. So what is that? I am deciding a range for doing that activity to carry a certain operation for my business, and it will have a certain cost. But that cost will be in a range. And outside of that relevant range, if a revenues and expenses will likely differ from the expected amount, then the company has to identify the gap. Because what? The company has set a standard, and what is the actual? When the company has set a standard and the actual which is going to be vary, it means what? The company has to identify the gap. If it is up, so what is the gap between this? If it is down, so what is the gap between this? So what is that? It is a relevant range of activity which is set by the company to have the particular cost. Now, if we talk about the next, that is the relevant cash and benefit. Relevant cash and benefit means what? Ki benefit, as you all know, benefit means what? It is a profit, because everyone wants a profit. Why the organizations are there into the market? Why the companies are there into the market? Are they there into the market to have the loss? Obviously not. If a company is coming into the market, if a business is coming into the market, their very first goal is they have to earn a profit. If they are not earning a profit, or in a 2 or 3 years they are understanding that whatever the activity I am carrying or whatever the activity we are carrying into the market, if that is not sufficient or if that is not going to have the future, that time I will stop my business, or that time the company can remove or the company can take out their operations from the market. Okay. Now the relevant cost that can be defined as any cost which is relevant to a decision. Many a times companies are taking a decision to have the market growth, to have the more profitability, to minimize the cost, and that decision which is having a certain relevance of a cost, because every decision have to pay, every decision has to have a certain cost included in it, and a matter is relevant if there is a change in cash flow. Why the change in cash flow? Because see, as you are a company, and if you are coming into the market, you are coming with a capital, right? The capital can be your own capital, the capital can be your borrowed capital, the capital can be a loan, the capital can be a borrowing from the friends, borrowing from the relatives, loans from the different financial institutions, loan from the banks. So what is that? This is the cash flow which is there into your business. Why the cash flow is necessary? Because when your cash flow is more, that time you know that the liquidity position is high of the company. Because when the liquidity position is high, it means what? You are having a liquid cash, you can pay off the debts. Why we are saying that the bank is having a bankruptcy? Why we are saying that the bank is not going to pay amount of money to them? Why? It is not the thing that bank is not having a money. Bank is having a money, but the liquidity position what the bank has to be maintained, that is not going to be maintained. And that is the reason we are saying that the bank which is always getting certain problems, and due to that we are facing a problem. So these are the certain causes which is affecting a decision making, and here it is having a relevance of cash and benefit, and that is the reason we are studying the concept that is relevance of cash and benefit. Obviously, when the organization want a certain benefits or the profits in a market, that time they have to pay a certain cost. Like, take an example, if an organization want to sell a product into the market, but while selling a product, before selling that, the certain amount of cost which is incurred by the company, and companies are paying that cost into the market. But company knows after a future pay or after a period of time or in a future period of time, then only they will going to get a cashback. Then only they will going to get a benefit. But for having that benefit, company is stucking their amount in a particular time span, and that is the reason it is related with the cash and benefit. Okay, now if we talk about the next here, if we talk about the sub point of this, that is the relevance of cost and benefit for operating decision. Here, cost and benefit is also known as a cost benefit analysis. Why the cost benefit analysis is much more important? Because see, your operating decision which is going to be vary, which is going to be fluctuate. Every time you cannot say that that will have a fixed cost. That will have a variable cost, because every time the monetary terms or in your organization, whatever you are going to pay a cost for a particular operation, that is going to be vary. Okay. Now the cost benefit analysis, it is a process which is used to measure a benefits of a decision or a taking action minus the cost associated with taking that action. It means what? Okay, you are taking a decision. So that decision will require a cost. But after taking that decision, when that decision is going to be fulfilled, that amount of cost you are getting minus out of that. So what is that? This is a cost benefit analysis involve measurable financial metrics, that is such as revenue and earn, or we can say that it is a cost save as a result of decision to pursue a particular project or a decision to pursue a particular research. Because what? Every company tries to minimize their cost, and how they are going to minimize the cost? Because they have to take care of their operating decisions, they have to take care of their variable cost, they have to take care of their different costs which are incurred in a business. And that is the reason we are studying, that is cost benefit analysis. See, in an economy there is a curve, cost benefit analysis. If your cost will be high, obviously your profit level which is going to be down. And if you are using a optimum utilization of your resources, your cost which is going to be down. And when your cost which is going to be down, obviously your profit level which is going to be increase. Okay. Now the second one we will see, that is relevance of normal and abnormal cost. Now the question is, what do you mean by normal cost and what do you mean by abnormal cost? Normal means what? Yes, they are the normal in nature. How they are normal in nature? Because these are the regular costs which are incurred in a normal conditions during the normal operations of an organization. Means any kind of normal activity or any kind of normal operation. When you are required a certain cost for doing that normal operations, like take an example, you want to carry a stationery for your business, but that is what, that is a nominal charges, or that is the normal cost, that is the regular cost you are getting for your business, because you know every month I have to pay the certain cost, because it is a normal for me, because it is a normal activity of a business, it is a normal thing for my business. So take stationery charges, electricity charges, any transportation, small transportation charges, any daily activity charges. So what is that? These are the normal costs which are incurred while they are talking about the relevance of a normal cost. And what do you mean by abnormal cost? Abnormal cost which is not certain, or we can say it is having an uncertainty because it is not a fixed, or we cannot say that yes, in a normal days we are doing that, we are no, because it is abnormal. Abnormal situations are there and abnormal operations are there, due to that you are incurring a cost into your business. Like a simple example you can take any natural calamity. So if we talk about any natural calamity, let us take a current example of COVID. So what is that? If you are taking an example of COVID, it means what? The people were not thinking about that the COVID will be there. But the uncertain situation that was came, and due to that the people has to face the problem, organization has to face the problem. So the cost which has incurred, that is known as a abnormal cost. So this is about the normal cost and abnormal cost. Understood about this? Okay. So here is the assignment which is given to you. The very first question is explain the concept of cost. You have to explain what do you mean by cost. Second thing is that you have to explain what are the different components of a cost. Right now only we have seen the objectivity, materiality and all this. So these are the components you have to write. And the third one is explain two subpoints of a relevance of a cost and benefit. Just now we have seen the two relevance concept of cost and benefit. After doing that, you have to mail me on this mail ID that is given to you. Now, what we have learned today? The very first thing we have learned today, that is concept of cost. What do you mean by cost? How the cost which is defined. Then the next is definition of a cost. Definition of cost, we have seen the different definition which is given by the Chartered Institute. Again, the definition, general definition we have studied. And the third we have studied about the components of a cost concept. What are the different components which are there for the cost concept? Understood now? So, in our next lecture, we will going to see about what is the meaning and definition of a costing. Then, what are the different objectives of the costing? Why the costing is done? Then the third one is what is the meaning and definition of a cost accounting? And the next, meaning and definition of cost accountancy. Because see, these are the different terms. Costing will be different, cost accounting will be different, and cost accountancy will be different. So these three concepts which is going to be learned for the next session. And then features of cost accounting. So thank you very much everyone.